Hey, this is Matt from InvestiQuant. Today is Wednesday, December 1st, 2021. Yesterday was a big down day in the markets. All the markets closed down sizably this morning. They are rebounding and heading back up towards yesterday's highs ahead of the open. So what we'll look at this morning is a study based upon the first of the month. I'm going to go ahead and grab all four instruments here. The setup we'll be looking at is entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, for this study on the first day of the month, I'm going to add a little bit of context around what happened yesterday and the gap that we're getting this morning. So the first thing I'm going to do is go into the opening filters. I'm going to say that we are gapping up. I'm clicking on that right there from the gap direction. It has been added. The next thing I want to do is go to the price patterns library. And I want to say yesterday was a big down day. So the way I'm going to do that is I'm just going to say yesterday closed down more than 1%. So I can grab that from the active today. I can just click there, close greater than 1% lower. It comes from the direction of the last close category here. So you can see the equal sign is highlighted there next to close greater than 1% lower. There's other ways I could do that, but that's a pretty simple way to do it. So I've added that. Next, I'm going to put us in a bull market. The way I'm going to do this is I'm just going to add a 200 because we're going to be looking at something on the first trading day of the month. I don't need to add a 10 on this just because I want to keep as many samples as possible, and I don't think it really makes much of a difference. I think if I added below a 10 instead of just leaving it open, it may only make one trade difference. So typically when you get those big moves, you're going to be below a 10-day moving average. But let's go ahead and add the calendar filter next, which is going to be that today is the first trading day of the month. So that comes from the unique days here. I can hit equals next to that, or I could grab it from the active today. But that gives me everything that I need. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you are gapping up on the first day of the month in a somewhat bull market, which is described as at least above a 200. This doesn't tell you if it's a really strong or really weak bull market, but at least you're above the 200. And the prior session closed down sizably. I've got it as at least 1% lower. Historically, we've just got 12 samples in the S&P, so not a lot here to look at, and that's dating back to 2003, so pretty rare to get that sizable of a move. For the NASDAQ, we've got 16 samples. For the Dow, 15. For the Russell, 20. If we look at the win rates, they all agree historically the day after that sell-off on the last trading day of the month has been bullish in this scenario. So the S&P, 83% of those samples have finished higher than the opening print. For the NASDAQ at 69, for the Dow 73, for the Russell 75. So not a lot of samples there, but they are all certainly in agreement as far as win rates go. If we look at the average moves, look like the average loss is larger than the average win in the S&P, and with it being that small of sample sizes, they can get really skewed by just a 1 or 2 days in this sample that is, large on one side. So that could be the case there. There's obviously not a lot of losses if you got an 83% win rate on 12 samples, so that could easily be skewed. With the NASDAQ, they're fairly similar in size. The Dow, average loss a little bit larger. The Russell, the average win a little bit larger. But I think the bigger takeaway here is the win rates are all very similar and fairly strong and in agreement there on the small samples that we do have. So hopefully you found that helpful. Good luck today.